What's going on, everybody? In this video today here, I wanted to look at senseonics or SENS stock. We've got some potential positive things to look at as well as some negatives. So let's take a glance at both these positives and negatives. If you don't mind hitting the like, subscribe, ringing the notification bell, definitely appreciate your support. Consider checking out the links down below to some stocks and cryptos. Consider joining my membership for $2 a month, and let's look at senseonics. Now I will leave this down below for you, but this just came out today and it goes over 5 stocks that are preparing to pump this quarter. Now you can take this for a grain of salt because the whole point of this article is these companies are oversold on the RSI, therefore they think they can pump this quarter. But all these companies here on this list are under a 30 on the RSI, meaning they are oversold, and senseonics is mentioned with an RSI at the time of this article of 27.10. But I will leave it down below for you if you want to look into a few of these stocks and look for a rebound. And I'll also leave this down below for you. This article is quite old, but there was an article on Seeking Alpha I was going to bring up to you guys, but I don't have a membership. But it did basically say the same thing, so this article still holds relevancy, although it is a bit old. But it basically says that the global blood glucose monitoring device market is expected to reach 37 billion by 2026, which is a compound annual growth rate of about 12%. But this does include all glucose monitoring. Now looking at CGM, which is part of senseonics segment, the CGM market size is expected to reach over 15 billion by 2026. And the rise in obesity and the increase in the aging population in developed countries are major factors that are influencing blood glucose monitoring devices market growth. And I'll leave this down below for you, but I wanted to bring up one more thing here in this article, and then you can look over it for yourself. But the usage of glucose monitoring devices among professionals in hospitals and clinics is increasing. With advances in point-of-care glucose monitoring technology, professionals treat many patients in a short period, reducing the turnaround time for diagnosis. Standalone clinics prefer to use self-monitoring blood glucose devices for diagnosis purposes. The increasing recommendation of CGM devices by physicians is expected to increase the usage of CGM devices. So as these become kind of more of the norm compared to doing the typical finger prick, we can definitely see accelerated use on these CGMs, including senseonics ever since CGM. But now I want to go over one headwind for the company, and then we're going to look over the chart. I definitely have something to show you there. And I did want to remind you guys, that senseonics is now trading under $1. They have been trading under there for a couple weeks now, not yet a month, but what happens when you're under $1 for over a month? Well, you get a delisting notification. It gives you about 180 days, subject to another extension, to regain that compliance, get back over $1. Now this is certainly a lot of time. If they do get that delisting notification, they have plenty of time to regain compliance. However, it is another hurdle for anyone looking to invest into senseonics, and this definitely adds a headwind and makes it a little bit more risky, so people that aren't willing to take too much risk may be shied away here. But what have you been doing lately while senseonics has been under $1? Have you been taking advantage of it? I personally have been waiting. You might be in a different position than me. If you know my channel well, you know I cover a lot of small caps, and I'm already overextended in a lot of these small caps and not willing to take the risk of adding more into some of these. I'm personally just holding off because of my current risk level. But you, of course, might have a different type of portfolio. You might be really heavy in larger caps, dividend stocks, and might want to take a little bit more risk with some of these small caps. I am going to continue to hold senseonics, but at this current point, I'm not necessarily adding at this price. It has been a bit of a falling knife, and getting this NASDAQ delisting potentially could cause a further drop. But I did want to show you something very interesting on the chart, and let's take a look. Now, one thing right off the bat is we are oversold on the daily, we are oversold on the 4-hour, but ever since we kind of broke this beginning of a pattern, it just started selling off. Earnings came out and we got more sell-off. And I think in a lot of ways, retail investors were tricked here, thinking that now this company is suddenly profitable and they will be moving forwards, when this wasn't necessarily due to revenue. This was due to some embedded derivatives, and we may not see a profit in the next quarter. I think Wall Street took advantage of this as a chance to sell. But looking at something else here I wanted to show you is we did have this gap right here in December of 2020, before we just went on this epic run. We did have this gap here and it just now filled it. Now, the question here is, do we maintain this kind of peak as a support, these previous tops as a support, or do we fall back down all the way down to 40 cents? I am unsure. I think if we can start running back up over $1 and we don't get that delisting notification, that'd be a great thing to see. I think if we do get this delisting notice, we could potentially trade a little bit lower. It might bring a little bit more fear into senseonics. And I want to remind you guys that it is certainly high risk at this point, but I do still think it's worth a small percentage of the portfolio, but don't go crazy on it. I haven't been loading up now that it's been under $1. I've been taking my time, being patient, and keeping my portfolio somewhat proportionate. You don't ever want to go all in on one stock. I've heard horror stories when people go all in on bingo or all in on VGX, things like that. And that typically never ends well. Sometimes you get lucky, and you hit the lotto on some of them. But in my eyes, the first goal in the stock market is risk management. and then second comes profit. But you don't want to eat into all your profit taking too much risk. But looking at the chart, I wouldn't be surprised to see a little pop. We are oversold. We did just finally fill this gap. We may see a pop from here. But let me know what you guys think about senseonics. Am I wrong for not adding under $1? Or do you think that's a wise decision? I'm curious where your head is at on that. And also, what have you been doing? Have you been adding while it's under $1? Have you been holding off on it? Are you planning on selling it soon, or are you going to hold it for longer? I think senseonics is still a very innovative company, and they still do have a big opportunity with this growing CGM market, but do realize that even at this price, it is still relatively high risk. But thanks as always for watching, guys, and I'll see you later.